Investors, hello. This is AI Crypto Insights channel, a few minutes of AI-powered insight into the market. Just a quick reminder, this is for educational reference only, not investment advice. Today we're parsing a really interesting article from Johan Yoon, looking at how Asia is at a major crossroads.
All right, so let's get right into it. The crypto landscape in Asia right now is sending some seriously mixed signals. On one side, you've got these internal meltdowns, projects basically at war with themselves. But on the other side, there's this powerful, undeniable march towards mainstream regulation and integration. So which is it? Chaos or consolidation? Let's break it down.
We're going to start at the micro level with a pretty public civil war that's been happening inside NEO, a project that was once famously called China's Ethereum. It's a perfect case study, really, for the kind of conflicts that can bubble up in decentralized governance.
So picture this. It's New Year's Eve, and the co-founders Eric Sang and Da Hongfei just take their entire dispute public. We're talking accusations of mismanagement flying back and forth, a real battle over who controls the project's assets. It's like a classic founder feud, but with the added messy layer of a decentralized treasury.
And here's the core of Zhang's accusation. He claims that after he was convinced to step back from joint leadership, Da Hongfei basically used that opportunity to funnel NEO's resources into his own separate project, a project that directly competes with NEO. I mean, that's a huge allegation, a fundamental conflict of interest. But hold on. Da Hongfei fires right back with a completely different story. He says Zhang is just lying, fabricating facts. According to Da, the real problem, the one that's not negotiable, is that Zhang has spent years dragging his feet on securing the project's treasury with a proper multi-signature setup. So from his perspective, this is all about a basic failure of security protocol. And here you can see the two stories side by side. It's a classic he said, he said. Zhang claims Da had sole control over most of the non-native assets. Da counters by saying that's misleading because the vast majority of the foundation's assets were always in their native NEO and gas tokens anyway. Now, they have promised a full financial report for Q1 to clear things up, but you have to imagine the damage to community trust has already been done. Okay, so now let's zoom way out from that internal chaos and look at a much bigger, much more orderly trend. Because across Asia's biggest economies, we're seeing this really decisive shift towards bringing crypto right into the traditional financial system. This quote right here is a massive signal. You know, when a finance minister from a country like Japan says this in a major New Year's speech, pointing directly at the US, using crypto ETFs, and saying, essentially, we need to do that too, well, that's a huge policy shift in the making. They're telling the world, we see what's happening, and we are not going to be left behind. And you can really see the momentum building here. Hong Kong's already in the game. They've approved their ETFs. Japan is actively changing its laws to pave the way, reclassifying crypto so it can fit into their financial system. And in South Korea, the exchange itself is saying, hey, we're ready to go. They're just waiting for the regulatory green light. The direction of travel is just unmissable. All right, next up, let's turn to Vietnam. This gives us another really important piece of the puzzle, because here we see a country that's actively building out its regulatory framework, not just for the sake of innovation, but because it's under pressure from global financial watchdogs. To really get why Vietnam is moving so fast, you have to understand this term, the FATF gray list. Getting put on this list, which happened to them in June 2023, is a very big deal. It basically puts the country under a microscope, signaling to the world that there are worries about its anti-money laundering controls. So for Vietnam, regulating digital assets is a critical step towards getting off that list. So what's their response? Well, the city of Da Nang has approved a pilot for a stablecoin conversion service. And what's really interesting here is the model. It's non-custodial. That means the licensed company, Dragon Lab, helps make the swap happen, but they never actually hold the user's funds. It's a really clever way to bring some regulatory supervision to the on and off ramps, and it's a first for the country. And finally, we get to what might just be the ultimate sign that an asset class is maturing: full integration into the global tax system. And on this front, Indonesia is taking the lead in Asia. So what is this CARF thing? Well, put simply, it's the crypto version of international tax agreements that already exist for other assets. It's all about making sure different countries can automatically share information about crypto transactions to clamp down on tax evasion. The days of operating in a tax gray area? Yeah, those are numbered. And don't think for a second this is some far-off future. Just look at this timeline. They start tracking the data as soon as 2026. The very first exchange of that info between tax authorities happens in 2027. And by 2028, you can expect other major hubs like Singapore, Hong Kong, and Malaysia to be on board. This is happening, and it's happening fast. AI analyst verdict. The era of operating in the regulatory shadows is closing fast in Asia, replaced by a structured, compliant, and taxable ecosystem. So what do you think this all means for innovation? Share your thoughts in the comments. We'll see you next episode.